AM 1380, The Biz, the Wall Street Business Network.
Are you one of the 9 million Floridians living in a community managed by a property manager or HOA? If you've ever wondered what your rights are as a resident or what your role is as a volunteer board member, you've come to the right place. Welcome to the Condo Coaches, your resource for when your gated community starts to feel more like you're stuck behind bars, or when that guy next door decides that a hot pink Chevy on cinder blocks really sets the tone for the neighborhood. The Condo Coaches is brought to you by lmfunding.com. Find the Condo Coaches online at thecondocoaches.com. And now your host, Johnny Torres.
Hello, everyone. Thank you once again, as always, for listening, watching us live. Facebook.com/The Condo Coaches. Facebook.com/The Condo Coaches. If you want to watch us live, we do it every Monday, typically 1 o'clock right here, where you can watch us, interact with us live, send us comments, questions as we're doing the show. And then, of course, those of you listening on the radio all across the state of Florida, thank you so much for tuning in. We love getting all of your questions and all your feedback. If you haven't heard the Condo Coaches before, we are a team of volunteers lending our expertise to condominium and homeowners associations, helping you through all the issues that go and all the hurdles and all the trials and tribulations that come with running a condominium or homeowners association. And we have experts in just about every field. So if there's something that we can help you out with, feel free to reach out to us. It's very easy to get a hold of us. Our phone number is 813-331-5415. 813-331-5415. You can also email us. Our email address is help@thecondocoaches.com, help@thecondocoaches.com, because that's what we love to do around here, is help you guys. And also our website, an amazing place to get a hold of us, because there's multiple ways to get a hold of us on the website. That's thecondocoaches.com, thecondocoaches.com. And right there, you can also get our 2 premium downloads right now that are going like wildfire. Our first one, which we've printed thousands of copies of, it's the top 10 things you need to know if you're an HOA or a COA board member. And then our new booklet, which is incredibly important to you and your board, is how to collect on delinquent fees for your HOA and COA. Both of those downloads are not only vital to the operation of your association, but they're also absolutely free. All you got to do is sign up at thecondocoaches.com/playbook. Right. All right. So when you get to the website, make sure you look for the playbook. And today, joining me, as always, head coach Dean Akers. How you doing, Dean?
Johnny, doing great.
Great weekend.
Great weekend, great week. I mean, I just keep getting amazed. You know all our downloads. We've just had an incredible number of downloads. We were at a trade show in West Palm this weekend.
That's
I
right.
gave away probably 600 booklets at the trade show. We're going to have a trade show calendar that we're going to get up on the site, because we're going to be doing a lot of trade shows between now and April. And
that's also a great opportunity not to meet head coach Dean Akers, but also to meet the condo coaches there and get your questions and your issues, at least get the ball rolling there, right there in person, so you can see that the condo coaches do exist. They are actual people. And so we go to trade shows all around the state of Florida, and we may be coming to one near you. Now, the one we did is this past weekend was in West Palm. And then do you have an idea of what the other one's coming up, or more or less where they're at?
They're going to be we have one in March in Orlando. We have another one in Tampa in March. We're going to be around all our state.
Perfect.
We're also going to be in Delray this next Monday, which our show will be on Tuesday this next week, because we have 22 associations that are coming together to have a condo coach board that they've asked for different coaches to be able to question and to really have kind of a really, really cool interactive deal that's just total board members getting questions answered.
Which is unbelievable that we're able to get these 22 associations together. And if you want to get a number of associations together, or whether it's 1 or 22 associations, we'd love to come and assist with your board of directors. All you got to do is reach out to us at thecondocoaches.com. And so that's going to be a lot of fun. Yeah. We'll have lots of pictures, maybe some video live from that workshop in Delray. But again, at some point, the condo coaches are going to be in your neighborhood at a trade show near you. If there's one that you want us to come out to, just reach out to us, help@thecondocoaches.com. Shoot us an email address with the details, and we'll get signed up. Now, to introduce our guest for today's show, before we get into all the goodies, our guest today is Senior Vice President in Community Association Banking, Janet Romano. How are you doing, Janet?
I'm doing great.
Yeah.
Thanks for inviting me.
Well, thanks for being here. You know, it's one of those things that, again, I don't think people realize the full extent of what they get into when they join these association boards, and they don't realize they'll be dealing with insurers and appraisers and now bankers.
Absolutely. I think understanding your association's finances is key.
All right. Well, we love kicking off every show, delving into some of the questions and some of the comments and feedback that we've been getting through our Facebook page, through our website. And Dean, do you want to kick one off, or you want me to kick this off?
Well, I do want to share with an upcoming guest, and we're getting it plotted now because we've had a lot of requests about it. We have a retired property appraiser in the state of Florida that speaks all over the world now. And I'm not going to share his name today, but he's committed to coming on. He wants to be a big guest, to be a condo coach with assessments and how to deal with all that. And he speaks all over the country as a property appraiser. And we hear stuff about getting these units and all this stuff appraised right and stuff because it's big money.
Well, and again, for a lot of people, their home is not just their residence, but it's also an investment. And in many cases, you know, whether it's a condo, a single family home, townhome, whether it's your first, second, or third property, you want to make sure you're not losing money on your investment there.
Right.
And so that's going to be pretty sweet. And I'm going to be looking forward to that.
Yeah.
All right. Well, we'll kick this off with a couple questions we got through our website. You can send us a question or a topic that you'd like for us to talk on at thecondocoaches.com. We heard from Carl, who's in the Orlando area, and I'm reading right from the email. It says that, I guess in the previous episode, all right, we were talking about if the CNR is old or incomplete or not easy to read, a copy can be acquired at the county. All right. So far, so good. With that said, the question is, if any changes in the CNR are or were made over the years by the board, is the board required to file a copy of those changes with the county in a timely manner? Or is filing required, and what are the consequences if changes are not filed?
We talked to our legal side, and I didn't get the consequences. Consequences are never good, but you should always file your amendments. Your condo documents should be current and accurate and recorded at the various county you're in.
I understand, Dean, from the various lawyers I work with, that those amendments are not in effect until they are recorded. So if you've made a significant change and your community has voted on it, that's great. But unless they're in the county records, they're not really in effect.
It's not official, and it could be challenged, really, at that point if they're not filed with the county.
Right.
All right. Well, that's great. Great question from Carl in Orlando. So thank you so much to Carl. And if you need any further explanation on that, please feel free to reach out to us again. And you'll definitely be hearing from us here at the Condo Coaches. Our next question comes from Miami. It's Maria from Miami. She says, and this is a pretty hairy situation they got going on there. She goes, "We're in the process of recalling all of the present board members and the management company." So they've got quite a coup happening down there in Miami. They need 92 owner signatures, but they're close to obtaining all the signatures they need. So the question is, are they obligated to get another management company once they remove the ones that are currently in place?
Again, we asked some of our legal team about that, and she may weigh in too on it. But no, once the board's in place, they're the ones that can contract with the management company, so that you could put a new board in place and the current management company's there. They all get along. There's no requirements to change. But that would be at the discretion of the board of directors.
Right. So if they are getting rid of all the board members and the management company, it's to the discretion of the new board whether or not they bring in a new management company.
Absolutely. One of the communities that I lived in years ago did a total board recall at the annual meeting. It was an ambush. It was amazing.
Wow.
And they decided, well, they're going to get rid of the management company too. I stood up and said, listen, management company works for you now.
Sure.
You need to have an orderly transition. people get confused and they say, well, why are they doing that? Management company doesn't do anything that's not directed to by the board.
Right.
So the new board can affect some very strong positive changes, even with the current company. But it's their discretion.
I mean,
but wouldn't you agree that when you have that much chaos, the last thing you want to do is do an instant management company change?
I absolutely think so, because, it's your financial records, it's the culture of your community, it's your minute books. Having that continuity even for a couple months can be very helpful.
Okay, so give themselves a little bit of a window there before they kind of toss everybody out.
Well, yeah, because they may find, as we have found, I just was with another association down in Southeast Florida, and we have the situation they want to get rid of the management company. The management company wasn't the problem. Now, I'm not endorsing the management company,
sure,
but they needed to get their ducks in a row. Once their ducks were in a row, then if they want to get rid of the management company, that's their prerogative. But the management company was clearly not the problem.
Well, and again, they're working at the discretion of the board.
Exactly. So the board sets the policy. Management company implements it. You have a bad board. You got rid of the board. That's the problem. Now you have time to evaluate, where do we want to go from here? Is this management company going to be responsive and, give them a chance to perform or move on?
Wow. So,
Jen, I got to ask you a question, because she's...
all right, we got a minute.
Okay.
Go ahead.
We can come back, but we're blessed to have her on our show today.
Absolutely.
Because she's not just a community association banker. She has been around this industry for a while.
A few weeks, yeah.
And she has a lot of experience.
For a minute, as the kids say nowadays.
Mm-hmm.
Yeah. So when we get back, there's some things she can bring to bear on this question, too.
Okay. All right. Well, we'll get to that question. Our guest today, Senior Vice President in Banking, Community Association Banking, Janet Romano, Head Coach Dean Akers, and yours truly, Johnny Torres. It's the Condo Coaches. Reach out to us, 813-331-5415, 813-331-5415, or hit us up at thecondocoaches.com. Segment 2 coming up right after this.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
It only takes a minute to find out if you may have prediabetes, and you can do it at doihaveprediabetes.org. But you're probably not going to. Nope. I'm sure you've got a perfectly good excuse. Kids, work. I get it. You're busy. So what better time than now? Let's begin. Raise one finger if you're a man. Ladies, none yet. Oh, count in your head if you're driving. Now, 3 more fingers for everyone over 60, 2 over 50, 1 over 40, 1 more if you're not physically active, another finger if anyone in your family has type 2 diabetes, another if you've got high blood pressure. If you're overweight, raise another finger, 2 if you're very overweight, and 3 if you're really overweight. You've just taken the world's first audio prediabetes test. And if you're holding up 5 or more fingers, visit doihaveprediabetes.org or talk to your doctor. There's no excuse, because prediabetes can be reversed.
Brought to you by the Ad Council and its pre-diabetes awareness partners.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you so much for listening, watching us live on Facebook, facebook.com/The Condo Coaches. That's facebook.com/The Condo Coaches. If you ever do want to watch the show live, you can do so there. And we love it because people send us comments and questions as the show's happening. We even got experts out there that are also giving us some insight too. There was a couple episodes ago where we were talking about, what kind of interior changes you can and can't make in a condo. And we got some great feedback from, somebody who was watching this show who's actually a remodeler and a contractor. So you never know who's listening to the show. And we thank you so much for listening. You can also catch every episode we've ever done. If you want to watch the video version, go to youtube.com. Search The Condo Coaches. If you want the audio version, sign up on iTunes, because I love the podcast version. You can do it on iTunes. You can do it on SoundCloud. And of course, Facebook.com also has all of our episodes. So Facebook, YouTube, SoundCloud, iTunes, you can find us anywhere and everywhere. We're talking about banking with your community association. More specifically, we're going to get into today's topic, which is, does your association qualify for a loan. And our guest today, Janet Romano, Senior Vice President of Community Association Banking here in the Tampa Bay area. And, of course, Dean Akers with us. So let's kind of start off at the very, very beginning. I'm on a board of directors sometimes, not only because maybe some delinquent fees, but also things happen, right? Things come up, things that need to be repaired, things that need to be maintained, and we need a loan, all right? So how does the process need to begin on the board side?
The first thing the board has to look at is, well, is it a loan really for us? I mean, you want to look at what funds do I have on hand? What is the project? Is the project immediate? I'll give you an example. I worked with L&M on a property in Manatee County that absolutely needed to replace a roof. And the roof was failing prematurely. They had about 50% of the funds they needed for the roof, and they needed to borrow the additional funds. And I sat down with them, meet with your banker. It's important to work with somebody in banking who knows associations. There are many banks that specialize in working for associations, and those are your first line of defense, because the other ones may hold your bank account, but many, many bankers in Florida don't understand how to lend to an association since the association owns no real estate. So find a good banker.
Well, and that's the thing that I don't think even most people even know exists, that there are bankers that specialize in working with community associations. And so, as you said, there are other options out there, right, other than getting a loan. What are some of the other options? I mean, we know, obviously, kind of passing that on to the residents through increased fees and that sort of thing, maybe one way to raise that money.
Well, when you have to do something immediately like this, you have two choices usually.
Okay.
Or actually three. You can get a vote of the owners if you have enough in reserves to borrow against or borrow from yourself. You can do a special assessment. If you need to do this job right away, that's going to be an immediate lump sum special assessment, which can put a lot of stress on your owners. Or you can consider a loan, which can give you the ability to pay it back over time and make it a little easier for the owners to pay back. So there are a couple things, and sometimes a combination of all three.
Gotcha. Excellent. Well, and again, I mean, in your situation, would you say that most bankers like yourself will come in and advise as to the best strategy to make this financially viable for the community?
Absolutely. It's one of the things we pride ourselves in, because no two communities, as you know, are alike.
Right.
And everyone has different needs and culture and the way they operate. So we want to make it a custom product for you. So if you're going to borrow, we want to know, how much of an increase in the monthly cost this loan is going to be for each of your owners.
Well, it's just like buying a car. You want to know, all right, I don't care really what the car costs in totality, what's going to hit my pocketbook every single month, right?
Well, and you see today, and she sees it all the time, I'm sure, especially in Southeast Florida, where they have not put away the proper reserves. So now all of a sudden you have these huge special assessments where they go, some ladies lived there 50 years, and they go, your special assessment's $35,000.
Wow.
Well, that's...
It's an impossible situation.
Right.
What most boards are trying to avoid is having people have to move out because they can't afford to replace that roof.
Sure.
Or upgrade the electrical system or whatever project they're facing. They're trying to keep their owners in their homes and keep the community stable.
Is there a magic number at which point they should say, okay, we definitely need to get a loan, or is it really subject to each community's financial situation?
It's so individual. I'll give you an example. I worked with a community up in Longboat Key recently that thought they needed to borrow $3 million. They gave people the choice. You can pay over 5 years, in which case it would have been the loan, or you can pay us over 12 months. It turned out that everybody chose to pay over the year. I said, no loan is necessary. You're good. Okay? Where some other communities, that would have been a major hardship.
Sure.
And more than half of those people would have said, we need 5 years to pay, and we're willing to pay with interest.
Right. So it really depends. Now, let's get into, qualifying, right? Essentially our topic of the show. And one of the things that we've talked about is making sure that not only are you insured properly, but you also have gotten a recent appraisal. What factors in, in terms of what you need to qualify for an association loan?
One of the things that is really important to understand that in a condominium association and in most homeowner associations, the association itself owns no real estate. The real estate is owned by the owners. So the association cannot provide real estate collateral. So what we're using as collateral is the cash flow of the association, the collection of assessments.
So that's, again, going back to another show we've done, which is making sure that you are properly accounting for the fees that you are collecting and the fees that you're not collecting, at least knowing where you stand on all fronts.
Exactly. So what we're looking for is at the current rate of maintenance, what people are paying monthly now, what is your current delinquency? Or is everybody able to pay? So obviously, right now, my average association on the west coast of Florida is showing around 5% delinquency, a little higher on the East Coast.
Yeah.
Are you seeing that too, Dean?
Yeah.
You're in the collection business.
I'm in the collection, but for my day job.
Is it because the kind of more inflated real estate market on the East Coast, or what are the factors that differ there?
I think many different factors. One of the things is on the West Coast, most associations have put away reserves, so people know that they're not going to get any big surprises. On the East Coast, particularly Dade County and parts of Broward, where they're not reserving properly, you have more investors. People are worried about that big special assessment, and they're just slower pay. So the most important thing we're looking at, first criteria, is what are your collections now? Are you collecting from most of your owners? Next, we're going to look at how much you're going to borrow, and how much is the debt service, the repayment of that loan, going to increase people's monthly fees.
And then, and also base that, I guess, on whether or not that would be affordable, right, to the residents?
Absolutely. Just as a general guideline, without a unit owner positive vote, we don't like to increase fees by more than 50%.
Right.
But you could if...
We could if we had the support of the community.
Okay, all right.
Everything is... then the other thing is we're going to take the total amount of the loan. We're going to divide that by the number of units. We're going to look at the recent sales, and we're going to look at the amount per unit as a percentage of that unit's value.
And when you're talking about increasing people's monthly association fees, what do they typically seem to be comfortable with? What percentage?
It really is dependent upon the community.
Okay.
Some of the more affluent communities that have consciously decided, we're going to pay a special assessment. We're not going to reserve. We can do better with our own investments. We'll write a check until you build them, and then they don't want to write the check.
Right. Sounds good until they have to actually put a pen to paper.
But those communities, may vote and say, yeah, we want to borrow this amount of money. Whereas some of the other communities, you increase maintenance from 100 to 150, that may stress some people. And It's going to be really a conversation in knowing your communities.
Yeah, and we're seeing that back to her point of Southeast Florida. Mm-hmm. It may be anecdotal, but it seems like the communities that have the higher delinquencies are where people actually live in them as their home / they work every day and stuff. The retirement communities, we don't see as many delinquencies unless the big reason for delinquency, a lot of retirement, is God or bringing them home, or death, whatever you want to call it.
Absolutely. The communities of retirees are usually very easy to lend to because they've planned. Retirees are conservative.
Right. All right, we'll be right back. Does your community association qualify for a loan? It's the Condo Coaches. Hang around.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
There are many sounds in your day-to-day life. There are sounds that wake you up. Sounds that make you smile. Sounds that energize you. And sounds that help you relax. But there are some sounds that can alert you to danger and can help save lives. Wireless emergency alerts, now on many mobile devices, use a unique sound and vibration to bring you information about severe weather events, Amber Alerts, or other emergencies in your area. With critical information from local sources you know and trust, you can be in the know, wherever you are. For more information, visit ready.gov/alerts. Brought to you by FEMA and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you for listening and watching the Condo Coaches radio show. Once again, you can hang out with us live online at facebook.com/thecondocoaches, facebook.com/thecondocoaches, where, we help with all sorts of issues. And then, of course, we also take your emails at help@thecondocoaches.com. That's help@thecondocoaches.com. Or if you want to talk to somebody, especially one of our condo coaches within our network, you can do so at 813-331-5415. 813-331-5415 to reach the Condo Coaches. Today we're talking about, does your association, does your community qualify for a loan? And obviously the circumstances, right, that would put you in to needing to qualify for a loan. With us is Senior Vice President in Community Association Banking, Janet Romano, one of our new condo coaches in our network. And then, of course, as always, Dean Akers. Dean, we talk about the amount of hours and the amount of effort that goes into volunteering on a board of directors for these communities. What also, we would like to remind people of is that the Condo Coaches are also a group of volunteers that are coming out there to help, because we realize that most people are doing this not only out of their own time, and time is money, right? But also that they are doing it to give back to their community, and they may not always be the perfect fit for the role they've taken on in their association. Give us a little bit more background as to exactly what that process is like when the condo coaches come in and assist some of these board members with transitioning into running their community.
Well, what we do is we do a financial assessment. And again, it's a generic financial assessment. They give us their audits and all that, and I can send that out, or our people can send it out. And then we have a group of people that'll determine what coaches they need if they have an ask. If they are specific, I need this about roofing, or I'm having an insurance issue, or now with banking, we're going to reach out to some of our condo coaches and have them give some feedback to the associations.
Excellent. Well, and as I mentioned, Janet Romano is joining us. She's Senior Vice President in Community Association Banking. And again, very key to know that, it's always best to work with somebody who has experience in Community Association Banking. We talked a little bit in the first segment on the topic in regards to what exactly, you look for when someone is applying for a loan, and what it takes to qualify for a loan. Is it always structural, right? I mean, that's obviously the most common one, right? Where it's a roof or
Actually, there are lots of reasons associations borrow. I have some associations that keep a revolving line of credit, so it helps even out cash flow. For instance, they want to take the discount to, say, buy their insurance and not have to finance that. They may draw on that line of credit and pay it back out of their annual budget because it's a timing issue. Or they may, many of the older communities may have unanticipated breakdowns, like an elevator needs to be repaired. They may borrow from that line of credit, do a special assessment, repay it in 60 days. It's an inexpensive way to borrow and keep that money available to them, and it's for working capital.
And does that help? I mean, to have that revolving line of credit with a bank, in terms of, let's say, like you said, maybe it's just to pay the lump sum of the insurance up front, maybe save a few bucks, but then in case of a major need.
Absolutely. And they've established credit with the bank understands their financial position. So let's say we have a hurricane come in and they have a big hurricane wind deductible to meet. It's easy to increase that loan to meet that emergency because they've already established a relationship.
Now, when you're handling, I'm sorry, go ahead, Dean.
No, I remember when I was a very young man, my father recommended that I go to my bank, get a line of credit as high as I could get, borrow, use it, and then when I really needed substantial money, I had credit. And I was smiling because that's exactly what I did. And then I look at these boards, and to Jenna's point, most of them have never had experience running a business. So when you talk about a line of credit and how it works, they really don't know, do they?
Well, we explain it to them. A line of credit is for short-term borrowing.
Right.
We like them to clear that down to zero for 30 calendar days each year. And should they need it for a major emergency, let's say we have a hurricane come in here and they need to meet $300,000 deductible. At that time, we talk about making it into a term loan so that they have time to repay it. And establishing that credit can be very, very helpful.
And is it fairly easy or easier to establish that line of credit versus coming to a bank like yours and trying to get a loan first time out?
Well, it's easier to get a project loan where we can see exactly what you're going to spend it on, whether it's pavers at the pool or a roof or window replacement. Because if we don't know you, we can monitor the job, make sure the special assessment is coming in as agreed. When you have a line of credit, it's usually because you've already established a deposit relationship with the bank, and we understand how you do business, and we want to expand that relationship. So usually, first you find a bank you want to work with. Then you start making your main primary account with them. And then when you've established for a while, that's when you say, hey, it would be helpful for us to have a line of credit. And you can start small with, say, a $50,000 line. And as we get to know you, we increase it for your needs.
I have a question. I'm usually not the question guy, you are.
Right.
But it's interesting because how many condominium associations in your mind don't understand the importance of establishing a real bank relationship, not just where the property management company says, oh, put it at bank of deposits here because we told you to put it there?
Well, what I find is most boards don't realize that I'm there to help them, not just tell them, here's your checking account, this is what I'm paying you on it. I'm willing to sit down, work with you and your CPA, look at your financials, ask you for your cash flows, and try to get you the most return on your deposits.
But do you think most boards do that?
No, and it's a shame. And it's a shame. I mean, I try to let people know as many ways as possible. Call me. That's my job. I'm here to help you.
Well, and I think it's one of those things that maybe it's a generational thing where people feel that maybe that's the thing of the past was to have that relationship with a bank and the bank knowing who you are. But you're saying that that's still very much the case, that it's good to have those kind of relationships in the community.
I don't think it's a generational thing because I can tell you by traveling the state, that's why I asked the question to see what you would say.
Yeah.
Traveling the state, the people that I'm talking to that are having challenges, and I go, so how are you working your bank relationship? And they go, what are you talking about? I said, how you work? Well, our property management firm put us with blah, blah, blah bank, and we just do our deposits there. I said, have you met your banker, your relationship banker? What's a relationship banker? Because a lot of the property management firms and we're not, it's not us against it. We're condo coaches.
Right.
A lot of the property management firms have built relationships with banks, and they tend to just kind of navigate because it's easier, I guess.
Well, yeah. I mean, it's easier for the management company, but that doesn't mean I may be working with your management company. Pick up the phone and say, who is working with my association?
Exactly.
Usually your property manager will say, oh, you're with Janet's bank? Call her. She'll be happy to come and meet with the board. And then we talk over these issues. Hey, we're going to have to do a roof in 2 years. How can we plan for that? And we sit down with usually the property manager, the board, sometimes their CPA, and we try to come up with a plan so we're not in a panic mode when this happens. We know each other.
Well, one of the things that we always stress here on the show is to make sure that you know where you are with your assessments, make sure you know you are with your collection of fees, make sure you know where you are with your appraisals, all things that the condo coaches will be more than happy to help out your board of directors with. But you're saying that, that's also, many of the things that the bank's going to help them do.
Absolutely. It's a team effort. The condo coaches understand that.
Right.
If they're working with one of the other coaches and they want to bring a banker in there, I'm there to help in that regard. I mean, obviously, if you're looking for a loan and your delinquencies are very, very high, I'm going to be looking for someone to help you bring those delinquencies in line. So from 2 years from now, when you need that loan, you'll qualify.
Yeah, I would say some takeaway here, because this is a big deal.
Right.
Some of the takeaway is if you're a board member today and you have not had your banker come out and meet your board and get to know them, just learn about what they know about you, you need to put that on your to-do list.
Yeah, that's fantastic. Because again, as I said, it seemed like a kind of thing of yesteryear where you'd have that relationship with the guy at the bank, and and if you ever needed anything, he knew who your family was and who your kids were, and it seems like such a thing of the past, but it's still very much the way business is done even today.
Well, Johnny, it's different because it's a business relationship with a condo. Personally, most of us never go to the bank anymore, right?
Right. Yeah.
And we take a picture of the check with our phone. We do everything without going into the bank, between the ATM and online. But when you have a business like a condo, most condos are, hundreds of thousands of dollars in budgets, and they can make a significant swing in their income by talking about interest rates and where the money should be and making sure it's FDIC insured. We're working to try to do that. And most people don't know their banker wants to talk to them.
Right.
Right.
And again, they'll be more than happy to do so and come in at no cost.
Right.
Absolutely.
Right.
And it's not a thing of yesteryear.
No, but that's the thing. I would never, if I'm sitting on a board of directors, I would never think to invite my banker, to come in and do a presentation or just sit down for a chat with my board.
Well, she made a great point. My background is a lot of businesses I've been in.
Right.
I've always had a relationship with my bankers, but I can't tell you my personal banker. I can't even tell you my bank because I'm doing what you're saying. I'm taking a picture of the check. It's scanning all the back to my bank.
Yeah.
There's just no even reason anymore to go there.
All right. Well, we're talking about, does your association qualify for a loan, or maybe it needs a loan? The final segment with Senior Vice President of Community Association Banking, Janet Romano, coming up.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Attention men under the age of 35. You know what really impresses the ladies? When a guy has a few drinks and later gets pulled over for buzzed driving. That could cost you around $10,000 in fines, legal fees, and increased insurance rates. There goes let's grab dinner and a movie. Oh, I know. You drive more carefully when you're buzzed. You've proven that hundreds of times. A woman admires that kind of confidence. And you've practiced how to speak if a cop does pull you over. Slowly, clearly, and politely, like, "Good evening, officer." A woman admires that kind of foresight. And what woman doesn't find it adorable that you call it buzzed even though the law calls it drunk? you could kiss $10,000 goodbye, along with any chance of having a girlfriend. Because nothing says I'm a catch more than a guy who lives in his parents' basement and calls it my place.
Buzzed, busted, and broke. Because buzz driving is drunk driving. A message from the National Highway Traffic Safety Administration and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Final segment. Thank you so much for listening and watching online if you are at facebook.com/the Condo Coaches or on YouTube. Don't forget to subscribe. You can also subscribe to us on iTunes for our podcast version or SoundCloud if you're an Android user. So you can find us just about anywhere and everywhere. And however you want to digest our episodes, you can do so. We keep great track of all of our episodes there. We keep them in chronological order. We try to make sure that our descriptions are very accurate as to what we talk about. And today we're talking about, does your association qualify for a loan, or does your association need a loan? And one of the takeaways too is establishing a running line of credit with a bank, and which I think is an incredible takeaway among others that we've had this show so far. But joining us is Senior Vice President in Community Association Banking, Janet Romano, and of course Head Coach Dean Akers. Where are some of the... Do you find yourself that where the community association is maybe coming to you at too late or too early, or not? What do they need to do to prepare when they go to a bank to ask for a loan?
Most of the things I need to underwrite a loan should be readily available to them. They should have the last 3 year-ends of their year-end financials. We like, since it's once every 3 years they have to have an audit, we're looking at least one audit. We also are looking for an age delinquency list. Who's paying? What are they paying? We're looking, if it's a project loan, have they received bids? What is the approximate cost? If it's a large loan over, say, $1 million, we want to look at what other deferred maintenance has to be addressed during the repayment period of that loan. And is it funded? Do they have funds in reserves, et cetera? So we're looking at the association globally and trying to gather all the information. Of course, there are a lot of intangibles too, Johnny. We're looking for stability. Do they have good management? Is the board stable? Please don't call me up the week after the board recall.
Yeah. Yeah. Would they have to have a sheriff there to do a certified vote? It's probably going to be upside down.
Yeah, it's not a good sign.
Exactly. And that's usually on the East Coast, right?
Yeah. I've been to some of those literally with two sheriffs sitting in there counting ballots.
Well, I mean, we heard about the coup happening down in Miami. I mean, they're needing 92 signatures to overthrow the board. I mean, that's incredible. That it would even get to that level, get to that point.
Well, Johnny, sometimes... Most of the time, the owners in associations, things are going well. They're not paying too much attention. It's when things are really headed south that you get people upset. Dean, you know what I'm talking about.
Oh, yeah.
You've been the condo coach for a long time.
Yeah. You can see she can see the train wreck when she meets them the first time, generally.
Yes, We always laugh because you can't make up the story.
No, you can't make it up.
And so let's say that a community takes out a loan or a line of credit, and we were talking about building that relationship with the bank or your banker. How do we maintain that, right? Like, obviously now you have a vested interest in that community. Are there things that you look for? Is there, a constant follow-up? What can people expect the relationship to be like once they've established either a line of credit or a loan with the bank?
Well, even if they don't, if they're just a deposit customer, we're looking to meet with them, if we can, once a year.
Okay.
Just to take the temperature, make sure that everything's going as they expected, that we're meeting their needs. If we have new banking products that may be helpful to them, we want to make sure they know about them. If I look at one of my associations and I see, gee, they're over that FDIC limit, I need to talk to them about getting those funds insured. We like to be there, and we want to make sure that we're keeping them out of trouble.
Yep.
Well, and so we've talked about obviously some of the ways, right? Aside from the structural or the running line of credit, right? What are some of the reasons? Some of maybe the less common reasons why someone might take out a loan or a line of credit with a bank for their community association.
Sometimes things are not replacements. Sometimes a community votes to upgrade their facilities. For instance, we worked with an association that wanted to bring all their windows up to the current code. And we've done several of these loans. And the association, first of all, has to vote to approve what they call a material alteration, which is an improvement, something that wasn't offered when they bought their unit. And we work with them and we work with their attorneys to make that happen. Then we do the loan. I've also worked with associations that have had an opportunity to buy a parcel of land adjacent to their community.
Interesting.
Maybe they want to add a second swimming pool or another parking lot. And that is working with their attorneys to modify their common elements. The financing is really the easy part. Right. It's meeting the legal requirements.
Okay. And so in that, on that token, when you're talking about, again, some of these maybe less common ways to get a loan and that sort of thing. We were talking a little bit off air, there during the break, as to some of the aging properties, right? And so you also said that it does factor in, right? The state, the physical state of the community. And so, I mean, wouldn't it be recommended, I guess, that they take out a line of credit or a loan to make sure that they're upgrading and replacing some of the things in the community?
I got to tell you, if somebody emails the help at condocoaches.com, I have an Excel template I'd be happy to send out. And we did this for a community down in Southeast Florida. They were looking at whether they should take a loan out and stuff. They had spent money to do the outside of about a third of the units. It was kind of a tough condominium association, pretty large one, almost 400 units. What we found is when they completed the repairs and did it right, the condominiums went up 35 to 40% in real sell value. They were actually selling those for that much more.
Wow.
Absolutely. I in central Broward County about 15 years ago, I had a loan request from a manager I knew for a community, and this place had fallen to ruin. And he said, we've got a lot of renters in here because people can't sell their units. After we did the loan, they replaced the siding, they replaced the roofs, they fixed the sidewalks, they fixed the pool area. The whole character of the community changed because people could sell without bringing money to the closing table.
Right.
And people moved in who wanted to live there.
And they could ask for a higher value. They could ask for a higher dollar.
The increase was 30 to 40% in sales price, and the loan was great. I mean,
it's a shared investment. It's a shared investment on improving the overall community.
And the reason we built this template is everybody always goes, if we do this, it's going to be worth more. So we built the template so the form fills, so anybody could say, well, how much more? Okay, put that in. How much is the dollars? And this way, the board was dealing with objectivity versus subjectivity.
So they knew exactly what they were getting for in return for the loan.
And anybody that wanted to question it could say, well, I'm not sure. Okay, here's what the last 10 sold for per square foot. Here's what the ones that were blighted could sold for. This is what and all they do is fill those little forms out and hit enter. And if it's just facts, it's kind of like, It's just facts.
When I worked with that community in Broward County years ago, one of the things I did to sell it to management of the bank, as I said, look at the communities that are comparable around it, that are not blighted. Look what those units are selling for. After we do this work, we should see that same increase in value. And that's exactly what happened.
Yeah, because sometimes people are remodeling the interior of the homes and they're investing all this money in the interior of the homes, but then the outside of the homes are working against them. Because, at the end of the day, the outside matters just as much as the inside when it comes to the value of that property. And so it's a concerted effort for the community to want to invest to improve it all around.
Well, and I think that's why, back to what we started, we're going full circle. people like Janet and other bankers, they've got the T-shirt. It isn't her first rodeo.
Yeah.
And so using those resources as condo coaches or your own banks to get them in and build strategies with you is so important for the viability of a community and its total valuations.
Right. Well, unfortunately, we're just about out of time, but thank you so much, Janet, for being on the show today.
It was my pleasure.
You've been an incredible wealth of knowledge. And,
yes, thank you.
Does your association qualify for a loan? So if you're interested in more on that topic, whether it's running a line of credit, whether it's taking out a loan for your condominium or homeowners association, reach out to us at thecondocoaches.com. That's thecondocoaches.com. You can, of course, email us, help@thecondocoaches.com, help@thecondocoaches.com. We can put you in touch with Janet. We can put you in touch with any one of our banking condo coaches. And, of course, our phone number, 813-331-5415. Thanks for listening and watching. See you next time.
You've been listening to the Condo Coaches, brought to you by lmfunding.com. Find us online at thecondocoaches.com and join us this same time next week as we help you navigate life in your managed community.